Ladies and gentlemen, good day and welcome to Capacit'e Infraprojects Limited Q2 and H1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Before we begin, a brief disclaimer. The presentation which Capacit'e Infraprojects has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Capacit'e Infraprojects business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohit Katyal, ED and CFO, Capacit'e Infraprojects. Thank you, and over to you, Mr. Katyal.
Thank you. Good afternoon, everyone. On behalf of Capacit'e, I welcome everyone to the Q2 and H1 FY23 earnings conference call of the company. Joining me on this call is Mr. Alok Mehrotra, Mr. Nishit Pujari, and our IR team. I hope everyone has had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. Today, as we witness remarkable transformations within the real estate space, we understand the need to align our priorities with that of shifting customer expectations. Our ability to consistently morph ourselves and capitalize on emerging opportunities has empowered us to lay the foundation for sustained growth and progress. With our healthy order book and sustained order inflow and our expertise in executing and delivering projects, we are optimistic that we shall witness a healthy and sustainable growth in the future. Our key updates. Total awarded projects worth 2,147 crores excluding GST in H1 FY23, including work order amounting to 1,249 crores for MHADA BDD project awarded by Tata Projects Capacit'e JV. Upgrade in credit rating to BBB+ from BBB by India Ratings and Research. The company expects sanctions of non-fund based limits very shortly. The sanctions have got delayed by 45-60 days. However, once the sanctions are in place, the company expects the release of retention monies and advances to the tune of 100 crores, which will improve the operating cash flow as well as overall working capital by likewise amount. We are happy to inform that the company has signed settlement agreements for 2 of the old stuck projects with the Radius Group. Further, the Honorable High Court has given a favorable verdict in favor of the company in the case of IGIMS project, which was court monitored, and the whole amount of rupees 3.55 crores has already been released. We expect positive cash flow impact to the tune of rupees 55 crores, including the amount already received on account of the above over the next 3 quarters starting from the current quarter. Performance highlights for Q2 FY23. Revenue from operations for Q2 FY23 grew by 25% to 431 crores as compared to 345 crores in Q2 FY22. EBITDA for Q2 FY23 grew by 26% to 84 crores as compared to 67 crores in Q2 FY22. EBITDA margins for Q2 FY23 stood at 19.4% as compared to 19.2% in Q2 FY22. PBT for Q2 FY23 grew by 17% to 29 crores as compared to 25 crores in Q2 FY22. PBT margin stood at 6.8% for Q2 FY23 as compared to 7.2% in Q2 FY22. PAT for the quarter FY23 grew by 15% to 22 crores as compared to 19 crores in Q2 FY22. PAT margin for Q2 FY23 stood at 5% as compared to 5.4% in Q2 FY22. Cash profit after tax for Q2 FY23 grew by 15% to 51 crores for 51 crores as compared to 44 crores in Q2 FY22. Performance highlights for H1 FY23. Revenue from operations for H1 FY23 grew by 45% to 908 crores as compared to 626 crores in H1 FY22. EBITDA for H1 FY23 grew by 70% to 185 crores as compared to 109 crores in H1 FY22. EBITDA margin for H1 FY23 stood at 20.3% as compared to 17.3% in H1 FY22. PBT for H1 FY23 grew by 118% to 68 crores as compared to 31 crores in H1 FY22. PBT margin H1 FY23 stood at 7.4% as compared to 4.9% in H1 FY22. PAT for H1 FY23 grew by 84% to 50 crores as compared to rupees 23 crores in H1 FY22. PAT margin for half year FY23 stood at 5.5% as compared to 3.7% for corresponding period last year. Cash PAT for H1 FY23 grew by 82% to 127 crores as compared to 70 crores in H1 FY22. Cash PAT margin stood at 14% for H1 FY23 as compared to 11.1% H1 FY22. Gross debt stood at 365 crores excluding promoters' debt, with gross debt to equity at 0.3 approximately. Net debt stood at 190 crores excluding promoters' debt. The company's continued its focus on working capital management and quality of order book. The working capital cycle excluding retention improved from 91 days in March 22 to 88 days in September 22. Order book on standalone basis stood at 9026 crores as on September 30, 22. Public sector order accounts for 74%, while private sector for 26% of the total order book. We remain optimistic on India's recovery amidst the continuing global geopolitical uncertainty. Before taking the Q&A, I would like to reiterate the vision of the company. To improve the working capital cycle and bring it down to 60 days excluding retention by Q1 FY24. Our endeavor is to reduce leverage levels in medium term. Objective is to continually improve shareholders' return ratio by investing in people, technology and processes. I am now available to take the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, you may enter star and 1 to ask a question. We will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good afternoon, sir, and congratulations on a very, very good set of numbers, especially on the EBITDA margin. Sir, if I remember correctly, I think we had given a guidance of 19 billion for FY23. Is that number right? And are we on the track to meet the guidance?
We have given a guidance of 1800 crores for the financial year 23, and yes, we are on track to achieve and better that target.
Okay. Secondly, sir, we have received the order inflow from the BDD project of 1249 crore. Does this can we expect a larger amount as we enter FY24 and FY25? And has the work started? And have you started booking the revenues?
So we have booked close to about 14 crores revenue in H1. The work on 6 towers has already been started 4 by Tata Projects and 2 by Capacit'e. We expect the work to start on 16 towers in the current fiscal. So yes, going into the next financial year, you will see decent revenue being booked, which will grow by approximately 30% to 40% year on year thereafter.
And so the question is that will we get further order inflow from Mahatma BDD project as we go forward?
Yes. So we have this time removed the order on the consolidated basis, which our share is 4,032 crores. This will now come into the standalone order book position of the company, of which 1,250 crores has already been received. That leaves another 3,000 crores of orders to come from the Tata joint venture in the following years.
Understood, sir. Lastly, sir, how does the outlook looking for the order inflow from 12-month perspective from the government side and the private side?
We would like to maintain what we said last time. Our target for the current fiscal is 2,200 crores. Apart from what we have already, we are lowest in approximately 800 crores of projects, which would get translated into order book in the current quarter and next quarter. We will be beating by some margin the target of 2,200 crore, which we have set internally for the current financial year. Similarly, next financial year, we should be targeting an order inflow of about close to 26 to 3,000 crores. And with the bid pipeline, our qualifications, our client base, repeat order history, we expect to do that quite comfortably.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1 on your touchtone telephone.
26 to 3,000. 26 order book.
Ladies and gentlemen, if you wish to ask any questions, please enter star and 1. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Congratulations on a decent quarter. So my first question is on the FITCO project. So if you can update us on the...
I cannot hear you clearly. Can you please take the handset? I request you.
Yeah, hi, Rohit. Is it better now?
Yeah, better. Please tell me.
Yes, hi. Congratulations on a decent quarter. So my first question is on the FITCO project. So what is the status on the execution update there?
So we have done an execution of close to 86 crores in the last quarter. The momentum carries on. We expect to cross more than 100 crores in this quarter and 150 crores in next quarter.
I think previously we used to target about 750 to 800 crores of peak execution. So when do we expect to start achieving that? So in FY24, as per the schedule, how much do you think we can execute from the FITCO project?
So the client has given in writing to start the work on the location number 7 from January onwards. And they have also approved another extension overall of 21 months, which means that our peak execution should start coming from Q1 of the next financial year, which we have informed you. But we couldn't reach the peak because the location number 7 at Navade, while it was handed over on paper, physically it will come to us by December end.
So what could be that number for next year? So starting from Q1, how much execution you expect to do from that?
We expect to start with 60 crores to 70 crores and pick it up at 75 crore average.
So per month you are saying?
Per month. So when I say 86 crores for the quarter, so this quarter, as I told you, we will. The target is to do. Just give me a second. Close to about 94 crores plus escalation, so it should be about 100 crores, followed by 150 crores in Q4 of the current fiscal, plus price variation.
Then in Q1 of next year, you start doing about 200 crores plus.
Absolutely.
Great to hear that. And has the last tranche of the mobilization advance come in? I think about 125 crores was pending.
I explained this to you, Parikshit, last time also. Once the balance land is available, we shall approach the client. However, at the moment, 130 crores of advance has already been recovered by the client from the earlier advance of 337 crores.
And just lastly on this, the land. So what is the total size of the project which is under execution? And with this new parcel coming in, how much will the size go up?
So 6 site is 2,150 crores, excluding infrastructure works. And that availability is fully available. We have mobilized all the aluminium foam works, except 4, which will be available at site by next month end. So there is all the sites are fully manned, fully equipped, and with all the resources. And therefore, we are extremely optimistic of achieving the 150 plus crores target for Q4, if not better.
And the last site is how much to the overall order book? The one you said will get in January.
So December end is the Naware plot, which will be about 2,000 crores.
Great. And you were also saying you were going to take up some, if I remember correctly, some other developers are lagging behind, and I think you were in talks with Citco was approaching you to execute their projects. Any update on that?
So that is going on. We would be the last person that we do someone else's work. However, at the moment in time, I think we are focused first on getting that 4,000 crores. The sales response to Citco has been very good. You have been reading in the newspapers that a slab cycle of 8-9 days is already being achieved by each contractor, and that can be bettered to maybe 6 days, 7 days. From that perspective and the response which Citco has received, we believe that there could be an increase in the scope of work for all contractors, and we will be a part to that.
Okay. Thank you. Those were my questions. John, back to you for more questions.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Parvez Qazi from Edelweiss Securities. Please go ahead.
Good afternoon, sir, and thanks for taking my question. So my first question is regarding the MADA project. What was the execution that we did during the current quarter there?
So we have built 14 crores for the MADA project, and out of the 2 buildings which we are executing, and as I told, that total 16 buildings will be under execution by end of the current financial year.
So next year, I mean, what kind of execution can we see in this project?
See, one building is equivalent to 140 to 150 crores, and therefore the total scope available will be 2,240 crores, out of which our front availability will be 785 crores. And the construction period of that is 2 years. So we should safely assume that 350 crores should be the revenue, provided we get the frontage of 785 crores in the next year and the balance in the subsequent year.
Sure. And the second question is on our limits. I mean, what are our fund and non-fund based limits currently? And once the additional facilities get sanctioned, what kind of increase can we see there?
You see that the overall non-fund based untied up portion is 300 crores, which has led to a temporary increase in the fund based limits. So we are expecting tie-up with our lead bank, State Bank of India, Punjab National Bank, and a couple of other new entrants. So with 2 sanctions are expected in November. 1 sanction is expected in December. Now this results in we getting our release of nearly 100 crores of retention and about 80 crores of advances which have not been claimed at the moment in time. So overall, there is an impact of 180 crores from cash flow perspective, number 1. And number 2, out of this, we have emphasized that about 100 crores will come in this financial year.
Got it. And lastly, on the bid pipeline front, I mean, obviously our order intake has been much better than expected. Going ahead, which segment, as in either private or public sector, and within that, whether institutional or hospital or which segments are we expecting our orders to come from? That would be
we are more focused on institutional at the moment in time because the revenue built up happens much better. Number one. Number two, they are mostly the government projects now, as per the guidelines, are coming on EPC model, which gives us an opportunity. And thirdly, of course, hospitals, we are executing 3 at the moment in time, and endeavor will be to add maybe a couple of more over the next 3-4 quarters. But focus will be more on institutional commercial. However, residential has remained our core strength, and on absolute levels that will also continue to grow. So the bid pipeline is among us. However, we will have to adopt the pick and choose policy. So RLDA is a new client which we have submitted our bid for the Chandigarh railway station on EPC basis. There are projects in defense which we are eyeing to bid in the current quarter. Similarly, there are projects of hospitals in both PWD, CPWD and in MCGM, which we are targeting to bid. Going forward, there is a lot of scope for depot constructions for clients like MMRDA. So just to give you the flavor of the projects will be more institutional, whether you call it commercial, whether you call it hospitals, or you call it railway station development. So basically all cash contracts, more of them on EPC basis.
Sure. Thanks. I'll come back in the line for more questions later. Thank you.
Thank you. The next question is from the line of Ankit Babel from Shubhkam Ventures. Please go ahead.
Yes, sir. Good afternoon. A few questions from my side, sir. Sir, what we understand typically H2 is better than H1 for any infra company and for you also.
Yeah.
Now we have already done some 900 crores plus of turnover this year.
Yeah.
So what kind of revenue you feel you can do it in this financial year, considering the first half performance?
Dil mange more, isn't it? So now the point is that we should be growing with our original estimate at more than 35% in the current financial year at 1800 crores. So whatever extra, if that happens, please take it as bonus. The company remains focused on execution and also on recovery of its old receivables. That is the priority for the company at the moment. And it will also depend, because we have just started the Bandup Hospital project. We are yet to see how the revenue build-up happens over there. And I will be able to give you a reply to this answer more confidently when we meet for the Q3 earning conference call.
Okay, so after FY23, I mean, what kind of CAGRs you are looking for the next couple of years based on the order book and the visibility on the order inflows, whatever
I'm giving you that our commitment to the clients is somewhere between 22 to 25%. That's what the company has been doing since inception, except for these 2 years which were marred by COVID and other external factors on which company had little control on. However, we are confident we are back to pre-COVID levels in most ways. We should be back at the net working capital by Q1 of 24, and therefore we do believe that the company has ample opportunity to grow in excess of 20 to 23%, if not more than that, over the next 3 years.
So basically why I was asking this question was because in the COVID years, your order inflows were almost negligible.
Yeah.
Right. So can that 2 lull years of inflows impact your growth in the coming couple of years?
How is that possible? I just told you that our order book is close to 10,000 crore, 9,000 crore. And apart from that, we are L1 in another 800 crores. So we are looking to close the year at 9,000 plus. So that gives you visibility for at least 3.5 years at the CAGR we have just mentioned.
Okay.
And it would be wrong to presume that we won't bid for the next 3 years. So what I'm trying to say, we are giving our projections on the basis of the current order book.
Okay, that's helpful, sir. Sir, I missed your initial remarks. You were saying something about that debtors reversal and all those write backs. I couldn't get that. Can you please repeat?
Yeah, I mentioned that our expected credit loss, ECL provisioning on gross basis is close to 100 crores. On a net basis, it's about 90 crores. And this also contains about 25 crores of provision done for the Radius Group. All right?
Okay.
Or more. So we have signed the settlement agreements for two of the old projects of Radius Group, which should release 26-27 crores over the next 2 to 3 quarters. Number one. So this will improve the cash flow of the company. Number two, the Honorable High Court of Patna has given a favorable verdict in the case of IGIMS Patna, which was a court-monitored project. Subsequent to the verdict, the client has released bank guarantee and a hold amount of rupees 3.55 crores. Currently, the final bill is under recording. Subsequent to that, our escalation bills will be recorded. And subsequent to that, that is in January, our retentions will become due and payable. So we expect a total of 55 crore release from the old project, which will go directly into the cash flow of the company over the next 3 quarters.
Okay, so assuming that whatever you just said, happens the way you have said in the next 3 quarters, so and plus you'll have internal accruals and all execution and everything. So any timeline when you feel that you people can become debt free at net level, at least?
So our net debt is about 221 minute. I'll just tell you, 190 crores. Okay.
Okay.
So I have been telling that to go net debt free, we require 150 crores of our retentions and advances to come in, number one, which is only a matter of bank guarantee issuance, and it's around the corner. Number two, this I have told maybe a year back in the conference call also, that we expect the banks to reduce our margins from the existing level. A 5% reduction of margin releases 85 crores. So this collectively is much more than our total net debt. Our intention is not to go net debt free. Our intention was to go gross debt free. But yes, the 2 years impact may have delayed the program by a year or so, but the intent remains the same. We will be overtly cautious while choosing our clients. However, given our current client order book, current clientele, when we worked with them during COVID and subsequent to that also, we have not seen any slow-moving debtors from them. So this augurs well for the company.
So basically in the next, say, 4-5 quarters, you believe that this is possible?
Yes, it is. I just told you with the details. So you have to ask me whether the retention was released. If I say no, then I am not net debt free. If I say yes, you are net debt free.
True. Okay, and so my last question is just a follow-up on that Radius Group. You mentioned that 25 to 27 crores of amount would get released. So, and you have already provided for this. So whenever this money will come, there will be provisions, write-backs also in your P&L, right?
So at the moment, I am committing the receipt of inflows. Yes, there will be write-backs, but then the ECL is here to stay. So you have to make provisioning on retention. You have to make provisioning on debtor movement, uncertified bills, certified bills. So what will be the reversal? We will be able to tell you exactly in Q4. But yes, there will be something. And as I told you, the gross provisioning is at close to 100 crores plus. So out of this, nearly 60. How is the total provisioning for Radius? Out of this, the total provisioning for Radius is 34 crores. And yes, there will be a reversal of the provision, but the exact amount on a net basis, we will communicate during our next quarter conference call.
That's very helpful, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah, congratulations on a good set of numbers. So my question is pertaining to our capex. So can you guys give a guidance for capex for this year and next year, and how much have we done till date?
So the total capex for the current financial year would be restricted to 63 crores or thereabouts. 50 crores has already been done. We do not foresee any capex during current quarter. We foresee a capex of close to 10 to 12 crores in quarter 4. In the next financial year, we see a capex of 40 to 45 crores.
40 to 45. Sure. And sir, second question is pertaining to our interest cost. What would be our cost of debt currently, and since our credit ratings have improved, how much benefit will you get in the coming quarters?
The coming quarter is difficult to say, but yes, you will see a dip down in the next financial year, because after the rating is upgraded, the banks move it goes to their various committees, sanction comes, documentation is done. So you will see some benefit in quarter 4, but if you have to see on a sustainable basis, you should see that in the next financial year. Also, we will be approaching the rating agencies again in the early next financial year to have a look on how our performance has been, and we believe that we should be back to where we were prior to the downgrade.
Got it. Sir, any sense on the current cost of debt?
I do not have it in front of me ready, but I will tell my team to call you up and discuss it with you separately.
Sure. Thank you so much, sir, and all the best.
Welcome.
Thank you. Participants, if you wish to ask any questions, please enter star and 1 on your phone. The next question is from the line of Agam Shah, individual investor. Please go ahead.
So most of my questions are answered. Just a follow-up. So I believe 100 crore around is what the retention money is there, and broadly around 35 to 40 crores is what the radiant and the other settlement money which is coming. So is it the fair way to look at it as a broadly number of 120 to 140 crores which we'll be expecting in next 3-4 quarters?
See, I just explained to you that the retention is not 100 crores, the retention is 169 crores, out of which we are expecting a release of 100 crores over the next current quarter and the next quarter. Now, that figure could be 70. That is our target. Apart from that, we have to collect advances of close to 80 crores, right? So total inflow, which we are expecting, we are given a guidance of 70 crores for the current financial year, but that can improve provided the entire bank guarantee limits are in place. So you can note it down. We are targeting 100 crores of release of retention. We are targeting close to 80 crores of advances, and our target is that our release from the old outstandings should be close to 55 crores. Now, this is not going to happen all of that in quarter 4. I have given a guidance for 3 quarters, so that means quarter 4, quarter 1, and quarter 2 of the next fiscal. But this collectively means that the company's hold up funds nearly amounting to 235 crores will come in the system. And when it comes in the system, it will not change the creditor profile or the creditor level. It will have a multiplier effect. Your net working capital will come down drastically, and that is why our target for Q1 of next fiscal of 60 days, just do your maths, you will arrive at the same figure. And obviously, will also reduce the debt by at least 50% or maybe 40%. Therefore, the answer which I just gave to the previous caller of how you will go net debt free.
Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Siddesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. I just want to understand, how is the comparative intensity in terms of bidding both on the private side and the government side?
So private sector, I think, is coming back to the bigger contractors. Now, all the contractors are quite busy. Order books are full. So I do not know what will be the appetite to take private sector jobs of various contractors. we are more focused on the quality of the clients which we have, and we will be focusing on repeat orders from those clients until unless. So in the last 12 months, we have only added Adani to our new clientele list. On the public sector side, we have added Gift City. We should be adding IOCL over the next 15-20 days time. So I think we have on our bid pipeline, we have added RLDA, Railways, and we'll be adding Ministry of Defense on the bid pipeline side. So the competitive intensity in projects which are below 250, 300 crores continues to be high, but the competitive intensity comes down drastically when the order size is more than 400 to 500 crores or 600 crores in the public sector. When you look at that size of orders, there are only 8 or 9 parties who qualify across India.
Correct. So, I mean, in terms of, is the difference typically between L1 and L2 in PSU deals effectively, is it reasonably small or is it reasonably broad, or how should we look at it in terms of that? Sir, reason I asked this is that because initially, I think a few years ago, we were focused on private because we thought public was more L1 oriented.
Absolutely.
So how should we be looking at it?
So very good question. Now the point is that in private sector there is no L1, L2. It is more of your
qualification.
The presentation on the technical side, your logistics plan, your time completion schedule, and you may be L2 and you will get the project. And it also very directly depends on the client experience. And if you have had the opportunity to visit our sites, the quality and our methodology, what we follow, is self-explanatory. That's on the private sector side. On government sector side, we are not bidding for small projects where there is, where the competitive intensity is very high. Like Gift City, there were only 3 bids. IOCL, there were 5 bids. In RLDA, there are 5 or 6 bids. So we are looking at the projects where we do not have to compromise on our cumulative EBITDA. So the focus will continue in that fashion. We do not have any hurry to go and book orders. There are enough orders with the company to take care of its growth plan for the next 3 years.
And the receivables on the government side also hasn't been a problem?
Not at all. On the government side, there was only a problem with IGIMS, which I just informed has been resolved, and over the next 2 to 3 quarters, you will see the money coming in.
Sure. Thank you and all that.
Sorry?
Thank you. No, thank you.
Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Khushbu Jayesh Gandhi from Yes Securities. Please go ahead.
Yes, sir. Thanks for giving me the opportunity. So I joined the call a little late, so sorry if you have answered this question earlier. On the MADA site, the 7th site, so what is the status of the land, and do we expect anything coming from 7th site in quarter 3 or quarter 4?
You're talking about MADA or CIDCO?
Hello?
Are you talking about MADA or
Sorry, it's CIDCO.
So CIDCO, 6 locations are already available, valuing 2,108 crores or thereabouts, and the remainder land has been committed by the client to be handed over by December end. And therefore, the work on the 7th location also will start from quarter 4 of the current fiscal. And therefore, we do believe that the revenue built up per month will be close to 50 crores from quarter 4 and will peak out in quarter 1 of the next financial year.
Khushbu, do you have any further questions?
Hello, am I audible?
Yes, now.
Yeah, did you hear my answer?
Yeah, sir. So one more thing, sir, the 50 crore which we are expecting from quarter 4 will be only from the 7th side or totally from the CIDCO project?
Madam, the 7th site is being handed over in December end. So obviously it will not, it starts gradually and then peaks out. So therefore the target is 50 crores about 40-45 crores coming from the 6 existing locations and smaller portion from the new location. From April quarter onwards of 24, we will start peaking close to 70 crores of all the locations put together.
And can you give us the guidance of how much would we be expecting from the CIDCO project in FY24?
Madam, I just told you that overall projection will be 20-23% growth. So if our guidance for the current year is 1,800 crore, so we should grow by 25% at least in the next financial year, and maybe 600 to 700 crores at the moment is the guidance. But as I told you, there is a scope of improvement because the development that CIDCO is handing over, the 7th location by end December has come in written.
Okay, sir. Thank you.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Rohit Katiyal for closing comments.
I would like to thank you once again for joining this call today. We hope that we have been able to answer your queries. Please feel free to reach out to our IR team for any clarifications or feedback. Thank you and see you next quarter. Bye.
Thank you. On behalf of Capacit'e Infraprojects Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.